Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the gold market. So general market here shows not as significant reaction on recent PPI numbers as, for example, euro currency, dollar index, as gold mostly remains in the same area. So we have said that context remains bullish based on the major factors, and actually they're not a single factor. Policy, dynamic of the dollar, dynamic of the 10-year bonds, which suggests the upward action actually. From the technical point of view, we also suggest minor upward continuations just because this grabber has been formed here on a daily chart has not quite reached the target, so it should taken out of the stop. So market right now has reasons to suggest that if PPI numbers have become weaker, then the CPI numbers today also could become weaker. And if this really will happen, we could get straightforward upward continuation. So currently I would consider an area around 25, maybe 25.50 as the maximum, because by the two reasons. First of all, here is nearest target stats with this ABCD pattern. As alternative target, you also could use, for example, the extension of this butterfly. I would consider right now only 127 extension, which is 25.19. Yes, gold in a situation with some really big changes in the statistics, it could show some spike through the overbought area just to complete the target, also possible. But hardly it will happen higher to more extended destination points, just because 25.50, as we said in the weekly report, is weekly overbought area. So that's why it would be better to consider targets that stands below it. And here we have two of them, 25 I would say, and 25.20. There's two extensions. That's the nearest one. At the same time, guys, today currently we also should keep an eye on the weekly chart, because we mentioned in the weekend 3 grabbers, and it has been formed here in a row. Now market is once again flirting with the MACD. Currently it looks like no grabber will be formed, and it seems that last grabber also will be erased, but we do not know how the gold market will close. Today is only the Wednesday. So it's just with the 3 more sessions at the end of the week, and things could happen. Just keep an eye on what will happen. So it is important. This is another reason why I suggest that it would be better to stay focused on the nearest ending target. So, but overall short-term background looks positive. So if you take a look at the performance of the 10-year bonds, you could see that our suggestion was correct. Yes, we have got tail closing on 10-year bonds, yield is dropping, which is definitely supportive factor for the gold. And all the stuff suggests drop below 3.65. So market will return back down to an area where the actually Japan sell-off and running to safe haven been over. So once again, this area might be taken out. This definitely is negative sign for the dollar that you could see what has happened yesterday on the PPI report. On the gold market, reaction was significantly lower. So, and on other markets, and just take a look at the Forex market. That's definitely supportive for the gold market. Now, if we take a look at some technical moments here as well, on the fall time frame chart, the only pattern that we have, and I would like to return back to the idea of the double repo pattern yesterday. If you remember, we talked about possible Napoli patterns. Thrusting action is great, and we said if we get some pullback to 24.40, that might be a great chance to take the long position. But currently you can see that we instead are getting double repo failure. Why it is failure? We have thrust up, close below the 3x3, thrusting upward action, close above again, close below, and take a look. Market is closing above and moving above 618 resistance of the whole downward action of the double repo top. This is indicator of the failure. In general, if you even follower of the classical technical analysis, you do not know about any double repos, you could see the flag consolidation right near the top here and here. And this is always bullish sign, because market showing very tight standing near the major resistance, accumulating the energy for the possible challenge. So from that standpoint of view, if you would like to take the position, you could consider taking a long position without protection. It might be taken differently. For instance, you could use, as in euro currency we today have discussed, you could use stop buy order somewhere above 24.78. So if indeed CPI will be weak, you get the thrusting action here and your order will be filled. You'll take the position with on the way to the upward target. You could try to take position right now on the car market with the placing stop, I don't know, somewhere below these lows, for example, below the consolidation of the double repo and below the flag. The only problem with that is you could get you could become the victim of the volatility during the CPI report. It's just not very pleasant moment. So, but overall context currently remains bullish, and signs that we see also stands bullish. So currently at this point, I wouldn't consider taking any short positions. But if you will decide to take position right now, you will buy the uncertainty of the CPI numbers. It is supposed that it should be weak as actually PPI numbers, but it's not guaranteed, as you understand. So that's currently our view on the gold market. Keeping it short, if you still would like to try, in general risk not really very significant. You could try. So understanding all the risks that's involved here in the current position, you need two ways, either buying here or using stop buy on order right above the 24.78 area. So if you're not ready for this risk, well, in this case, just wait a bit and see what will happen. Once the target maybe will be reached, we could get the bounce and consider taking the position on some retracement.